From the morning reading, stocks close even. New highs for CRM, CTRP, NTES, VRSN, ADBE, and COST. Bulk of the technicals in the horizontal and diagonal breakout zones. 6 sectors moved higher on Thursday. XLU, XLK, and XLI were the strongest sectors, while XLV was the weakest sector. Breadth weakened as advancers led decliners 1.07 to 1 on the New York Stock Exchange and 1.24 to 1 on the NASDAQ, where decliners led advancers. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:58 a.m. Central Time, and I'm recording this in preparation for the market day, November the 20th, 2015. Full disclaimers at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing and trading decisions that you make. Okay, let's go ahead and dive into the morning report. And indeed, pretty decent action last night. Nothing exciting, but solid. All 4 U.S. broad market indices are up. The S&P futures are up about 0.25%. The Russell a little bit less than that. NASDAQ up about 0.25%, and Dow futures are up about 0.33%. Crude oil's down about 0.2%. Euro's down about 0.5%. Bonds are at scratch, and gold is up about 0.2%. In terms of overseas action, relatively quiet. China up about 0.33%. Hong Kong, the strongest market in the overnight, up over 1%. Japan just up over scratch, as is Germany, and United Kingdom right at scratch as well. In terms of macroeconomic reports for today in the United States, there is nothing, so another scratch there as well. Should be a relatively quiet day, with the only thing of real note is that this is the monthly OPX, so there'll often be some repositioning going on with the expiration of the monthly options. Just keep that in mind. In terms of current volatility, relatively quiet. Short-term VIX 13.62. Skew continues to remain at an elevated state, but IV percentiles across the various markets are all very, very low. You have a 20 on the SPX, an 18 on the Russell. NDX is a 15, Dow is a 22. No standard deviation moves were put in by any of the 4 broad market indices yesterday, though obviously we've had quite a slew of standard deviation moves in the days preceding that, going in both directions actually. So volatility certainly has been present in terms of price action, but in terms of fear, that has not been present. These are pretty low levels of, in quotes, fear premium in the volatility instruments. And let's see, let's take a quick pop over to the charts. Not anything terribly remarkable about yesterday. Obviously, the day preceding was a big body candle with a diagonal breakout. Yesterday's action was pretty much just consolidation of that move. This is the S&P, of course the Dow, very, very much the same. NASDAQ, also the same. These are mostly dojis with, that kind of marks indecision. I would put this after the big action of the day before, more of a just kind of inside consolidation. And then the Russell probably was the one with the most action yesterday, relatively weak, though, after a big body here, you kind of think of the first line of support is about halfway back down through the body. It didn't get that far before the bulls took over and it closed up off of that level. So it was the weakest of the 4 indices. That's apparent. But it also didn't have something where the bulls are just totally out of bullets and the bears were totally dominating. That is not the case here. So bearish, but bulls also had some power here still as well. In terms of the volatility futures, came down a little bit yesterday, closed. Actually, yesterday would be this candle here. It was up a little bit, and just up over 18. Right now, we are just under 18. So this is kind of right in that precipice area, that zone between what we think of as a bull market volatility, that 12 to 18 zone, and that more fear-laden zone of above 18. It's kind of hovering right there in the precipice. So that might be something to tell us as well, as that while there's not an enormous amount of fear in the market right now, we're also kind of perhaps finally balanced as to are the bulls going to take this up to the top, or are the bears going to take this back to the bottom of this range? It would seem to say that we're pretty finely balanced in that right now, and not a lot of obvious indications, at least from the volatility metric, to tell you which direction this is likely to go. Let's see, let's go to our daily report. And a few changes here today. IBD status is in confirmed uptrend. Accumulation distribution on the S&P is scored a C, the NASDAQ a C, so they're both the same there. I believe that NASDAQ was a C minus the day prior, so a little bit of improvement there. We continue to see relatively poor breadth, if you want to call this a healthy bull market. That doesn't seem to be quite supported yet in terms of the accumulation distribution scores on these two key charts. GMI index improved to a 5 out of 6, though that author remains in mostly cash in the core portfolio, but is tiptoeing into some positions it's starting to put in some positions. I'll just leave it there. Primary market condition neutral bear, so that continues to be a warning sign. And our decision point scoreboards continue to be a mix. On the short term and long term, quite a mix of signals going both directions. Intermediate term is more consistent, but when you put all this together and you pull together consensus, you would take this that our portfolio posture is in transition. These are mixed signals right now. We do have this intermediate term phase opinion is phase 2 with that diagonal breakout. We're calling this a trend reversal. So overall, we would call this transition with a bullish bias. If we were to have to flip a coin, we would expect that this would probably come up bullish most of the time, though that still remains somewhat in question. One of the improvements that came through from yesterday is on the intermediate term market posture. This is now flipped back up to very bullish with an upslope sentiment. And as you can see here, 3 of the 4 indices actually flipped to very bullish. The Russell, remember that action was more bearish than the other indices yesterday. That one is still in the very bearish camp. But the other 3 all flipped, turned up, and given their angle and their scores are in the very bullish area. Position sizing opinions on both systems are at 100%. Hedge warning status remains a 0 plus, normal with some elevated risk conditions. You'll recall yesterday that we kind of couched a little bit of concern about going from a 1 down to a 0 plus because of the intermediate term market posture still being in the bearish camp. Thankfully, that resolved after just that one day, and we now have that more in alignment with the IBD status of uptrend confirmed. So we have a situation where we're comfortable now with this hedge risk level being a 0 plus. So bottom line, bullish, relatively benign conditions, but there are some elevated risk conditions present. As we look down at some of the special parameters, you see distribution day count still remains relatively high with the S&P at a 6, NASDAQ at a 5. We still have this elevated skew that seems to be something that just won't go away in like about the last 4 or 5 weeks, it seems like now. So that continues to be out there. And we also have, in terms of these intermarket risk aversion indicators, 3 of the 5 of them are in currently a risk-off posture. So some areas of elevated risk conditions, but overall relatively benign at this time. In terms of special opinions, I don't believe there's any changes here from yesterday. VIX is inside the acceptable window. Absolutely okay, appropriate to initiate new option income strategies, cover call strategies, put selling, cautiously bullish, depending on how aggressive your particular position is. You might want to construct it in such a way that you have some defensiveness to it. Certainly this 1-to-1 ratio of out of the money, in the money strikes, this 1-to-1 ratio of high beta, low beta, that has served us well in these recent weeks, as this market has been so sideways when you really put it all together. I mean, we've had big down, we've had big day in the short term, but in the more intermediate to long term, we basically have been largely sideways. And an awful lot of the premium and profits that we've made off of cover calls have been coming from the actual cover calls and not so much the stock appreciation. So that should tell you something about the need to remain somewhat defensive. Also, in terms of sector specific, you see quite a bit of healing here. Energy, retail, and to some degree utilities, the weakest sectors, but certainly much improved as it was over a few days ago. In terms of percent change, you see utilities was the hero yesterday, up right at 1%, and then falls back from there. We had 2 sectors, energy and healthcare, that really got hit yesterday, but their 5 days are actually pretty solid. And probably energy would be the sector to still point to as most consistently being a poor performer. And you see even on the 1 year, that's down 21% year to date, all the way across, with the exception of the 5-day. That one continues to look quite ugly. And those folks that are value buyers, just be mindful that just because something is at a discount from what it was, a week ago or a month ago, doesn't mean that it can't continue to go down. So I would encourage you to look for signs of a true bottom with confirmation patterns before getting too aggressive with trying to pick the bottom on crude oil or anything in the energy complex. I saw some stats recently about earnings to date for this quarter, and if you put the entire market together, it doesn't look terribly pretty. But if you separated out the energy complex, the rest of the sectors actually were doing pretty well. But obviously energy is a very important, very large component of the S&P. So when you include it, of course, it really has hammered the top line numbers. But it's important to understand that if you're not investing in the energy sector and you're investing or trading in other sectors, those companies have by and large been doing pretty well on earnings. So this is something of a polarity that has occurred here, and just be mindful to that. So both from a value acquisition, this is a tough place to be sledding, as well as an understanding of what's actually happening in the broad market. You have in this situation one sector that's really getting hammered, and the rest of the sectors not so much. Okay, so I think that's probably enough for today. One thing I wanted to certainly bring to your attention is one of our products. This is our daily price guide, and this is an example from a few days ago. And if you're a day trader, and the futures package version of this has 8 markets. In this case, you see the S&P, the Russell, the NASDAQ, the Dow, and then the other 4 markets that would be included in the futures package would be gold, crude, euro, and bonds. So that package of 8 very highly traded futures markets by the day trader group would represent that package. And that package is only $25 a month to be delivered to you each morning. And basically what this looks like, there's 2 sheets. Each one of these has 4 markets on it. Obviously there are 4 affiliated markets. Here we have the 4 indices. And you can see as we scroll down here, we have each morning compiled all the classic support and resistance zones and have them all here for easy benchmark and reference. Be able to take your price action of the day. Look for ideally those very important levels along with confluence between important levels and secondary levels to see where classic support and resistance may come into play, to be able to set up your targets, to set up your entries with more complete knowledge as to what's out there and what are others looking at. But this is our daily price guide product, and again, it's emailed to our subscribers each morning. So that's that. Let me go ahead and flip back to here. As always, if you find what you're getting from us is supportive to your trading, we appreciate you acknowledging that by liking us on YouTube. Subscribe to that channel. That way you'll get announcements when this has been posted each morning. You can also, of course, retweet us to your Twitter followers, to your StockTrip followers, etc. Direct commentary and questions can be sent to support@falconglobaltraders.com. And I'll just scroll through this. These are some other opportunities that are currently available, and you'll see the websites to go to for more information. This is about those daily guides, and you see the website there to go and find out more details and more description about those daily guides. There's also 8 other markets that are the key stock markets: Apple, Google, Amazon, Netflix, and then the options indexes: SPX, RUT, NDX, DXJ. Disclosures, as always, hit the pause button if you need more time to review this. And we'll see you back here tomorrow morning, or actually it'll be Monday morning, for the Falcon Global Market Preview. Good trading.